Good afternoon, everyone. Welcome. We're here today to review the FY19 financials for the Mayor's Fund. We have our audit committee here, and we have our representative from RSM, our auditor. Before we get started, and I asked Jen to walk us through the financials, I'm just going to ask everyone to do a round, introduce themselves so we know who's at the table. So I'm Toya, Executive Director of the Mayor's Fund. Thanks for coming.
So I'm Jen Katz, audit partner with RSM.
Dan Block, Director of Mayor's Office of Strategic Partnerships.
Matt Glenn, Mayor's Office for Economic Opportunity.
Matt Everett, Secretary of the Mayor's Fund.
Ashley Fryer, Communications Manager at the Mayor's Fund.
Alexis Blaine, Office of Counsel to the Mayor. Maya Yakovich, Treasurer, Mayor's Fund.
Chris Kelsaw, Director of Finance and Operations, Mayor's Fund.
Great, and I'm going to ask Katie, can you introduce yourself as well?
Yeah, sure. I'm Katie Hunter. I'm a reporter with the Wall Street Journal.
Fantastic, welcome. It's an open and public meeting. We're happy to have you. So we have the documents, so I want to make sure everyone has a copy here. And then I'll turn it over to Jen, who will walk us through the report to the audit committee as well as the financial report, and then we can go through any questions folks from the audit committee might have for Jen based on their review of our financials this year.
All right, thank you. All right, so everyone should have 3 documents. I will start with the report to the audit committee because this is the required communications. These are items that we're required to communicate with you so that you can fulfill your responsibilities as those charged with governance. And I'll start on, I guess what's technically the 3rd page, but under required communications in page 1. Just looking toward the middle of the page, I want to highlight that the fund did not adopt any significant new accounting policies in the current year. I also want to report as part of this that there are no new GASB statements on the horizon that are anticipated to have an impact on the Mayor's Fund financial statements. Turning to page 2, there were no disagreements with management during the course of the audit. We did highlight in here one item that we considered a significant matter arising during the audit that was discussed with management, and that was just over a continuing matter regarding the appropriate application of GASB 33, and we'll go into that a little bit more. I do want to report that corrective action has put into place based on recommendations we've had in the past. We've seen substantial improvement. There are still just a few items that did come up during the audit that we discussed with management that management will continue to work on addressing.
And Jen, sorry, just a quick question on that for some of the folks. I don't know if you got to read everybody, but one of the things that I'd asked about this was how much of those items were matters of judgment or application, and how would you describe? Because like one's kind of like clerical error versus one is just this question of judgment and how you have to approach it.
Right. So mostly this is in complex situations where grant agreements need to be evaluated very closely in accordance with GASB 33. And because you're a nonprofit organization operating as a nonprofit but you follow GASB reporting, it gets even more complex that way. So it's more judgmental in terms of just applying the guidance appropriately.
And you'll walk us through that.
And yes, we will. But we did have the full cooperation of management in working through these matters.
Are there times you don't have the full cooperation?
No. Turning to page 3. So all financial statements have accounting estimates. It's just the nature of applying GAAP. So the summary of significant accounting estimates that are in the fund's financial statements are listed here. It's the allocation of expenses between program and support services, and the allowance for doubtful accounts. Based on the procedures we performed during the audit, after an adjustment that was recorded for the allowance for doubtful accounts, which we will talk about next, we've concluded that management's estimates, as reflected in the financial statements, are reasonable. So turning to page 4, this table is a summary of recorded audit adjustments. So what this table reflects are items identified during our audit that we brought to the attention of management. Management evaluated and agreed to record audit adjustments to properly reflect the nature of certain transactions. The first 2 items here we need to evaluate together. The total is approximately $515,000 of revenue that we identified should not have been recorded as revenue this year. Some of it was items that should have been deferred, so the cash came in prior to meeting the eligibility requirements under GASB 33 and should not have been recognized just yet. So what this is doing is taking it out of revenue, putting it into deferred revenue. The next item, the 405,000, this was a result of various items, ins and outs. So this 405,000 is a net number that ultimately was determined did not quite meet revenue recognition standards for fiscal year 2019.
So that's revenue that was adjusted that will now be applied to the following fiscal year, or that was referred back to the prior
So
fiscal
some
year?
of it prior, some of it future. It was a lot of ins and outs, but ultimately the net impact for this year's revenue was this 405,000.
So then do we need to then correct prior year's
Right.
statements?
So we don't, so what we do is we go through an evaluation based on materiality of what's considered material. And we looked at a cumulative impact also for this year, so we're able to conclude reasonably that the financial statements are not materially misstated.
Okay, how common are those type of adjustments?
Where it would actually be a restatement
No,
or
for an organization like this.
you're always gonna find something on an audit. I mean, for an auditor to truly be doing their job, you know, not everything's always perfect, and you hope that stuff does come and get fixed and cleaned up. So I would say it is common to have adjustments, but of course, these are all recorded, so they've been reflected in the financials, but you want to see that decrease. The next item that was adjusted was regarding an error we identified in our search fund reported liabilities for something that was expensed or that needed to be expensed this year. And then the next one that's listed here is related to the allowance. So as I alluded to before, management identified certain items that were deemed uncollectible related to prior accounts receivable. So this entry here just wrote off those old items and also established an allowance for any potentially uncollectible items in the future.
These were pledges that never came through and we don't expect to get.
Right. So approximately 278,500 pledges were existing as of the prior year and ultimately were not collected, so they were written off. And then this 107,000 is just an estimate of an allowance for any future situations that may occur like that. If we turn to the next page, page 5, this is a summary of uncorrected misstatements. So the difference here, these are items that were identified during the audit that were brought to the attention of management and ultimately not recorded because of various reasons, deemed immaterial, and some of these also are projected misstatements. So what that means is if we found an error, so from page 4, a lot of those were errors we found, they were reported because we audit on a sample basis, we have to project out over the remaining population. So some of these are really statistical numbers and not necessarily factual numbers. So you'll start at the top, reversed opening net position errors. This is also related to some of the revenue caveats, carryovers from prior year into this year of any, revenues between the years that may have been off. And then you'll see the next 3 are really projected misstatements, all related to items we've already spoken about. And the last one is a judgmental misstatement. So this is something that RSM calculates its own independent calculation of the allowance. And based on our own calculation, based on history, we concluded that potentially it could have been adjusted by about 64,000. But you'll see the net impact of all of these items is only 21,000 on your net position. So ultimately, it was concluded these are not material to your financial statements as a whole. And then the last item here is Exhibit A, and this is just a draft of the management representation letter. We're required to share this with you. This will be provided for signature by management before we issue the financial statements. So any more questions on this before I walk you through the actual financial statements?
To Matt's question on pledges made that didn't land, were those, was that the equivalent of somebody at an event saying, we're gonna contribute $1,000, $10,000 not coming in, or was that connected to projects that had expenses deployed that we then needed to use surplus or excess dollars to fill. And I don't know if you guys broke it down to that, but I'm just curious if you guys have a sense or a read of.
It is
'cause the fir-
broken down.
It is
by-
broken down.
By donor, yes, in my program.
Yeah.
Whether or not expenses were
Incurred. That actually, okay,
incurred.
so that's what I'm getting at. The first part I'm not terribly worried about. That happens all the time. Donor says one.
We would have to go back and check, but I don't believe expenses were incurred
Okay.
because these were pledges for a future year, so we spend money we have in hand
Yeah.
in the bank. We're not spending money with the assumption that dollars are gonna come in.
So they did not put the programs at a deficit.
Right, so, and we'll get to note 5 in the financial statements next, but all of the programs that did have a direct expense for these write-offs, they all have positive, restricted net
Correct.
position, which means they had available funding still.
Right.
Okay, so with that, you do have 2 financial statements in front of you. I'm going to start with the one that's just labeled financial report. So these are what we refer to as your basic financial statements. These don't have the results of the single audit testing. We'll get to that next. Pages 1 and 2, this is a draft of our independent auditor's report. So we are substantially complete with our audit. We're still wrapping up a few things. The goal right now is to be final early next week. But based on the results of our procedures, we are expecting to issue an unmodified or clean opinion. We turn to page 7. This is the statement of net position for your balance sheet. So total assets at June 30, 2019 were $18.9 million. This is about a 7.5% decrease from prior year. Prior year was a little bit higher at $20.5 million. There was a decrease in contributions and grants receivable, partially offset by an increase in cash, and the investments decreased slightly by about $700,000. If we look at current liabilities, they're $3.2 million. That's a decrease from the prior year, which was $5.6 million, and the decrease is all driven by a decrease in accounts payable. So that's a function of a lot of things: timing of when invoices are incurred, timing of when invoices are paid. And then if we look at total net position, it is approximately $15.7 million, which is an increase of 6.5% over prior year. Moving on to page 8, your statement of revenue, expenses, and changes in net position, otherwise known as your P&L or income statement. So total operating support and revenue increased up to $29.2 million this year as compared to $21.3 million last year. And when we do look at the footnotes, footnote 5 details out the source of all of these revenues. Total operating expenses increased from $20.7 million in the prior year to $29.2 million. So I believe revenue was up about 38%, expenses up 41%. So pretty consistent increases, which shows that the program revenues coming in are being used for program purposes rather timely. So you would want to see those 2 percentages going in the same, at the same rate. So you'll see there was a slight deficit of operating support as compared to expenses, but non-operating revenue, the City of New York contract this year, the amount was increased to $700,000. Not quite sure why the $1 did not come in, but because of that significantly helped the fund. And then you'll see the next 2 items are investment income. So as a result of this non-operating revenue, the fund actually had a positive net income this year, just over $1.1 million. So the footnotes are all very.
Sorry, Jen.
Yes.
The 29 million total operating support for this fiscal year, is that still open as you're finishing your? Is that a final number, or are you still
That's a final
finishing?
number,
Okay.
yes. So the only thing we're finishing is something related to the single audit testing, and I'll explain why we're still working on that one when we get to the next report.
Yeah.
But no, these numbers, we've completed our testing.
Okay. So 29 million raised in fiscal year.
Mm-hmm. Mm-hmm.
So I want to jump ahead to page 12. This is in footnote 2. Third to last paragraph. This paragraph addresses in-kind revenue. And there was one new item this year that I wanted to bring to your attention, and this was the donation of $9.5 million worth of reusable water bottles by the Swell Company, and they were given out to all New York City public schools. So a really great program, and you know that's something that has not been received by the fund in the past, so I wanted to point that out to you. If we turn to page 14, footnote 5, and as you continue to add to your programs, this list gets longer and longer, and I
Still
think
managed to put it on one page, I see.
I think by next year it's gonna have to be broken out to 2 pages. But
Just
for
shows
right
that
now-
we're busy.
So this is where you will see all of the programs that the fund is working on, contributions that have come in. So the second column, contributions and grants, that number will tie back to your P&L, and you will see you know how your funding is coming in, what programs are being supported.
This still is a focus on the agency or the group that the mayor's fund is partnering with.
Mm-hmm.
And so if it's something like, yeah, sorry.
Right, so it wouldn't be that, right, an actual detailed
No,
program
no, but
level per se.
what I was just trying to figure out though is if we have more than one project at an agency, they're the 2 or 3 other projects, they're
All in one.
It's
Yeah,
in
yeah,
one,
yeah.
yes, you wouldn't necessarily see, and that's certainly something that you can explore, you know, adding additional detail on if you feel it's important for the
Mhm.
users of your financials, yep.
Yeah.
So it talks about contributions in, program service expenses incurred, and your restricted expendable net position balance of the 15 million that ties back to your statement of net position. So if there are no further questions on this report, I'm gonna move ahead to the next report that everyone has, which is the financial report and supplementary information in accordance with government auditing standards and the Single Audit Act. So the first several pages of this report are exactly what we already went through. So we can actually skip all the way ahead to page 23. So page 23 is what we call the schedule of findings and question costs. And this is where we identify financial statement findings, federal award findings, and major programs. So you will see under financial statement findings, we did identify a material weakness again this year. It's similar in nature to the prior year material weakness, but the prior year material weakness had 2 components to it, one related to revenue recognition, one related to completeness of expenses. Remediation has been taken by management as it relates to the completeness of the expenses. The revenue item is still ongoing, but being addressed by management. For federal award testing, there were no material weaknesses or significant deficiencies identified. So what we do is we select major programs and we test the applicable requirements in accordance with uniform guidance that money is being spent on allowable activities and other various requirements. So we did not have any findings there.
Sorry, can we go back to the material weakness and internal controls? Are you telling us you identified this in a previous year, but on both prongs, management began to correct it? They've sort of completed correction on one, but correction on the other is ongoing. But it is where you would expect to see it, and you're not identifying additional.
Nothing new. So that table that I walked you through that showed all of the adjustments to revenue,
Yep.
that's what led to the material weakness. It's related to those adjustments.
Okay.
So we did have 2 major programs identified that are listed here for you to see. And if we turn the page to page 24, that's where we actually have written up the material weakness. So the criteria is the same as last year, and then the condition has been updated for what we identified this year, and we've already talked through this.
And again, Jen, as you said, this is something that management continues to address and continues to make headway on. It's a large volume of donations coming in and going out. And so we continue to work with our auditors at RSM to better understand GASB 330, or 33, thank you, GASB 33, so that when we're looking at our grant award letters and there are contingencies, we know how to recognize those dollars, whether it's this fiscal year, the next fiscal year, or that we don't recognize them at all, because they're contingent on deliverables that have yet to be met.
And then the last page is a summary update of prior audit findings. We will actually be asking that this be modified slightly in the corrective action plan, just to break out the two aspects, just to reiterate what we've already said today, that corrective action has been taken for one part of the prior year finding, but not fully yet for another part of the prior year finding, as evidenced by the repeat in 2019-001. So any other questions?
Great, thank you, Jen, so much. Does the committee have any other questions from Darren, Matt, or Alexis? Maya, as treasurer, did you have any questions or comments you wanted to raise?
No, none at this time.
Great, thank you so much.
I guess, I mean, it's, in getting brief on this and talking about it for Alexis' point, is, we had talked about, is there training, discussion, exposure, coordination that either isn't happening and should happen, like, what do you guys feel like to just keep strengthening those systems? Like, what's the right approach to
Yeah,
that?
so I think training is definitely the most important, and we certainly can come in and put on a training. We also will start making sure that the fund is getting invitations to any of our firm's online webcasts when we do accounting updates and trainings. And then also just internally, just when there are questions, knowing when to pick up the phone, call, get some guidance, research more online. Certain grants and contributions that you get are fairly straightforward, and some are very complex, and it's okay to pick up the phone and ask the question when you don't know exactly how to record something.
And I know that this year, we needed to try to accelerate how agencies were getting us information about the project. How did that work out?
So that was one of the recommendations
Yes.
and controls we put in last year, where Chris and team were asking for and receiving quarterly reports.
Yeah.
For some agencies, it worked very well. Those were agencies that had finance offices and had dedicated staff to respond to our requests, but for other agencies or Mara offices, it was challenging for a variety of reasons. So Chris has worked very hard to either fill in and do some of that work on their behalf, but it continues to be a chase.
And is it based on the size and capacity that they have, or to your point?
I believe so, yes. So yeah, if someone doesn't have a designated finance person, then yeah, it can be challenging for them.
Right.
So yeah, we do continue to work on that
Right.
better this year.
And that measure will stay in place. We'll continue to do those quarterly reports. Chris has suggested that we provided training for those finance folks and program folks. We do that on our programs and policy team around procurement, around how we issue RFPs, and so we'll do that as well for the finance team on this piece, so that we can continue that technical assistance and workshops that the Mayor's Fund provides to our agency partners to ensure that we're all coordinated.
I also agree with Jim's suggestion that we talk with RSM throughout the year rather than waiting
Yes.
until the beginning of our
Yes.
audit, so I will be picking up the
Yes.
phone and giving a call.
Any other questions from the committee? Awesome, thank you, Jen, so much. This has been very helpful, and it's been a pleasure to work with you. And I also want to thank Chris for leading and guiding us yet again for another year through a clean audit, which is really important as we continue to fundraise and develop and implement new programs. So, if there are no other questions, I will call the meeting to a close. I don't think we need to do.
Do we need a motion to
Oh.
approve?
Oh, sorry. Thank
Because
you.
it goes on the full board for
And then
action
it-
next week?
No, I don't.
But
No.
just the
I
committee
think it's just
adopts?
committee
It's just the
that
committee.
Committee adopts.
Yeah.
Oh, and then we share with them?
We share with them. Yeah.
Yeah.
So can I have a motion to approve the audit as presented?
So moved.
Matt, can I have a second?
Sorry, are we approving as presented or as You had one suggested amendment to the financial statements.
So there was a suggested amendment, to the last page, and then one number, below footnote 5 is going to be updated, but the numbers
The
that you've
numbers.
seen in the
Numbers are all
results
good?
are,
Okay.
yeah, are all
Good.
okay.
Sorry.
Alright, so Matt had a motion,
I'll second.
Karen second, all in favor?
Aye.
Any opposed? Great, so the audit stands passed. Thank you, Jen, and
Thank
our
you.
team at RSM. Really excited that we now are embarking on our second partnership
Yes.
through a competitive bid that we released last year to select the auditor for the next 3 years. So fantastic that we can continue that.
Thank you.
The meeting is adjourned. Thank you
Thank
everyone so
you.
much.